We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Russell Starr, CEO of Trillium Gold. How are you today, Russell?
I'm great, Tom. How are you?
Excellent. So I've recently heard you say that this is the most stealth gold bull market that you've ever seen. So is this a good thing for investors right now?
Well, look, I think it's an incredible thing for investors if they would just start paying attention to it. And when I call it a stealth bull market, what people don't understand is, so we operate in Red Lake, and Red Lake is a world-class gold jurisdiction. Hundreds of years of gold mining has occurred there. We own the property next to one of the most prolific gold mines ever in the history of the world, the Red Lake mine, which is, I think, 25.6 million ounces and ongoing at greater than 15 grams per ton. But while the juniors languish, flow of funds has actually gone into the ETFs, which aren't physically supported or backed by gold, which investors aren't really paying attention to. And it's largely gone into the majors. But the juniors are the ones that tend to really rip when you end up with a bull gold market. And so by stealth, what I mean is that we are literally, it's hard to find office space in Red Lake. It's hard to find a drill. It's impossible to find people, really good people. And yet, our company, who's sitting on a major gold discovery, is trading at fully diluted a $50 million market cap, which 10 years ago, when, the likes of Gold Eagle and whatnot were selling for $1.5 billion, we would have had a $200-300 million market cap. And it's backwards, but therein lies the opportunity for investors. Why are you buying crypto, cannabis, and psychedelics at billion-dollar market caps when they have no revenues and not touching the most underloved, underappreciated sector in the world, while gold is quietly testing 1900 again?
That's a great point, Russell. So what do you think is going to, let's say, spur that shift back into gold and bring it back to prominence?
Well, look, it's going to take generalists moving back into the space, and I firmly believe that's going to happen. You saw as recently as today, major spike in PPI numbers. Inflation is rampant. I always joke, so a lot of people don't understand that when the CPI numbers come out and they measure housing price inflation, so housing prices have skyrocketed everywhere in Canada and the US, but for whatever reason, the economic indicator and statistics measure the hedonic pricing of rent. So what you theoretically could rent your house for instead of actually measuring the actual price of housing sales. And at all times in history, this type of pricing in houses has almost always correlated with 4 to 5, maybe even 6% inflation. And yet the statistics show it hovering around 2. And so I think once people start to understand that the value of everything they hold is being destroyed, that's what inflation is, right? It's this creep of prices. They're going to start pouring their money into gold. And it was only like a month ago where people were commenting that, all of gold's value was being detracted by crypto. Everybody was trading crypto. Crypto is where it's going to be. Well, here we are a month later, crypto's taken a beating. It's down almost 50%. And the gold price has quietly creeped higher. So I think it's going to come. I just don't know when. And therein lies the opportunity for picking up companies like Trillium that are severely undervalued.
Yeah, that's very interesting, Russell. And as you're talking about inflation, you have a unique perspective because you also have a master's in economics. So I'd like to get your thoughts on how inflation is measured, as you were mentioning, and what you think would be a more accurate way to measure it.
Well, the actual definition of inflation is the printing of M1. So if you go look at what's going on in the US, it's clear that there's hyperinflation. They're printing money like it's going out of style. And then the next sort of more iterative approach is what they've done now, which is called hedonic pricing, which is using different ways of measuring the actual underlying prices. And if you were to actually go and look at this website called Shadow Stats basically is how they used to measure inflation in 1980. Mm-hmm. It's a very interesting website. They would tell you that the inflation rate in the US right now, measured by actual housing price inflation, actual cost of goods that are being consumed, it's closer to 10% in the US. And it's really it's going to be economic statistics that are all perverted. They're not what they should be. But very, very slowly, people are going to understand that if you're not long copper, gold, silver, and I pick on those because those are the three most underinvested commodities, period, over the last 10, 20, 30 years, they're the ones that are going to benefit the most once people appreciate what's happening. And the only way to protect your portfolio is by being long those hard assets. And so you can do that by buying physical gold, or you can do it by buying gold equities or junior gold equities or copper companies. But you cannot do it by buying fixed income because they control the fixed income pricing mechanisms right now. They're artificially holding the long bond down. And you can't do it by owning Walmart because inflation destroys the value of everything you own unless you own hard assets.
So as we're speaking about the commodities here, we've really seen the Canadian dollar kind of grind higher over this last year.
Yep.
So in your view, is this more due to the fact that it's more resource centered, or can it be also due to the fact that the government has recently announced that they're going to be raising interest rates?
Look, it's a combination of both, but ultimately, when you look at the fiscal imbalance that exists in Canada, we are not sitting in a pretty position right now. I often joke with people, I still believe that Trudeau is going to get reelected, not because I actually think he's done a good job. One of the worst comments I've ever heard out of a government is it doesn't matter how much money we print or how much debt we take on because interest rates are so low. These governments are going to have to keep interest rates artificially low. So you may see an uptick like you did in Canada that helps the Canadian dollar out a little bit. But the bigger picture move in the Canadian dollar is the recovery in oil prices. And we are a commodity-based environment. But once again, it's a beggar thy neighbor policy that is improving the Canadian dollars. We still have record levels of debt, and that's going to hurt us and hurt future generations. So yes, the Canadian dollar has improved relative to the US dollar, but it hasn't improved relative to gold. And gold is sort of that ultimate commodity, centuries of use, that measures how badly the world is currently faring. And, people are forgetting that $1,900 gold is effectively the previous all-time high. Yes, we tested 2,000 over the last summer, but gold at 1,900 is incredibly impressive. And for companies such as Trillium, will benefit us immensely in the long run.
That's an interesting point, Russell. But if you think about and adjust for inflation, we still seem to be undervalued here, right?
The Canadian dollar or
the gold price?
Oh, yeah. No, the gold price is being artificially held lower. It's being done by the bullion banks. The U.S. government just can't let the U.S. dollar fail miserably against the gold price. So you just see layering and layering and layering of just paper manipulation in the gold market. But what's changed recently and what will break the back of the bullion banks, both in silver and gold, is that people are finally taking delivery. And when you take delivery, ultimately you can't see this continued oppressive sort of perspective out of these bullion banks.
So considering the current political attitude in Canada towards resources, and maybe let's take and contrast oil versus the mining industry, do you think the government needs to become more favorable towards, really working with these resource companies?
Yeah, it's funny you mentioned that. I've often said, and again, it has to do with who is running the country right now. You see our government do everything they can to support SNC-Lavalin, but don't realize that this country is built off of natural resources. And until you see a more supportive political climate, companies are going to suffer. And, you see it with us. I often hear that they're going to get rid of the flow-through opportunities, which really are part and parcel of the lifeblood of the junior exploration market. And that's how Canadians and Canada grew up. It's not through manufacturing. It's through oil, gas, copper, gold, nickel. And ultimately, that's where we need to see some focus out of the government.
So as the president of Trillium Gold, what challenges has COVID made for you and how have you tried to overcome them, Russell?
Look, Red Lake is very remote. It's in Ontario, but literally, if I wanted to try to drive to our mining camp, it would take me about a day, 25, 26 hours. So the good news is that when you're remote, you almost immediately have, call it a barrier against COVID. But what we do is anyone who comes into the camp has to be tested. We've never had any cases. Our camp is remote even from Red Lake. You have to take about an hour boat ride or a 30, 45-minute car ride. And so, we have COVID policies in place, which are sensible for any company. But just the fact that we're so remote and we're in Canada, so we're using Canadian employees versus in some countries where you're having to bring employees in from out of country has really helped to mitigate against any COVID issues for Trillium.
How has this also affected your drilling program, though, Russell?
It's affected the timing of our assays. It's been nothing short of a nightmare to try to get assay information out to investors. So a lot of the drill holes we've recently press released are drill holes from 2-3 months ago. And what happened was in the summer, you had every single junior company effectively finance and then drill. And then now you had all of these assay companies who literally can't process those assays because they've got half the staff in place at the assay labs. So that's the one area where it's actually hurt us a little bit.
Mm-hmm. So when you're thinking about putting together a land package to explore, why choose Red Lake? And can you give us some perspective on your thinking around that?
Look, I wish it was uber scientific, but the reality is the best place to look for gold is where you found gold. And Red Lake, like I mentioned, is a prolific jurisdiction. Great Bear is onto a new discovery. Battle North just got taken out by Evolution. Evolution is ramping up their production in Red Lake. And you're seeing a lot of other smaller companies look to pick up land finance because of these more recent discoveries. So I immediately embarked on a pretty major acquisition spree, so to speak, by picking up a lot of land that sits on the same geological belt that Great Bear's discovery sits on. And I believe that ultimately, once we get a chance to explore that, we should or could possibly have another discovery on our hands. And so, gold is very, very hard to find. It's very, very hard to mine. So the best place to look for it is effectively where it's historically been found.
So what would be the ultimate goal for an explorer like you guys? Would it be to be taken out by a major? And would more M&A in the space be indicative of this cycle really ramping up?
Yeah, so M&A is happening, and it blows me away that the investors still haven't figured it out. So like Battle North was our neighbor pretty much everywhere, and they just got acquired by Evolution. And it's clear that Evolution wants to have a very dominant position in the Red Lake area just because of how much gold there is and how much is being found. And so, I often say to people, my goal is to get this company taken out. And if for whatever reason it's not taken out, clearly we're going to want to put Newman Todd into production. And if we don't get taken out just because of Gold Center, which is the property right next to the Red Lake mine, I would gladly step aside and bring an operator in because that's what's best for shareholders. So if we ever did get into a production scenario, I would recuse myself. But my suspicion is that if we hit at either Gold Center or we keep on hitting at Newman Todd, ultimately this company will be taken out.
Interesting. So you're also a senior advisor at Defi Technologies. So can you give us an overview of what Defi Tech is?
Yeah, so the single fastest growing area in crypto is DeFi, and DeFi stands for decentralized finance. And I saw this junior company, I bought some stock, I then talked to the then sort of CEO. He's the guy who actually created Hive blockchain. And my view is that decentralized finance, just because of my experience in the capital markets, the years that I spent on Bay Street, is going to alter the financial and global landscape through building infrastructure on the back of Ethereum. And, people need to recognize that this is kind of like Internet 2.0 or Facebook 2.0. This is literally the fastest growing sector in the world. Defi Technologies, not the company, but actual DeFi technology. These protocols have gone from, call it 1 billion 6, 7, 8 months ago to close to 80, 90 billion. And again, it's just part of my thesis of crypto is going to be relevant, gold is going to be relevant, and change is going to be relevant. And people need to embrace that. And that's what, market inefficiency is all about. Buy something low, sell it high. And that's what I believe I'm doing with DeFi.
So you also recently wrote an article entitled Bitcoin and Gold are Complementary Investments. And in it, you're making the argument that it shouldn't be really a binary decision of only investing in gold or crypto. Rather, it should be both in tandem. Is this because they're both ways to protect your wealth, or are you simply trying to capture more alpha?
Well, actually, you hit on both points. I think crypto is here to stay. And I really just don't see crypto taking away from gold. I think they both serve a very, very important purpose as fiat currencies continue to destroy themselves. And what's become problematic is that the pitch or the positioning in the US has been, it's crypto, not gold. It's Bitcoin, gold is done, it's finished. That's not really the right way to look at it. You should be looking at these as symbiotic opportunities to actually make money and, back to your point, make alpha. And literally, just using the last month as proof, a store of value, which is what, Bitcoin continues to present itself as, shouldn't fall 50% in a month, right? That's not a store of value. People need to understand the risk that's incumbent in the Bitcoin world. Ethereum, to me, makes a lot more sense. And then obviously, clearly DeFi does as well, because they actually have practical uses. I'm not saying that Bitcoin isn't worth investing in. I'm just saying that, it's very, very rare that you see gold, if ever, fall 50% in 1 month. I'm going to guess that's never, probably hasn't happened for 50 years or 20 years when gold was somewhere around that $200 range. So it's not an either or, it's a both perspective, and people need to embrace that.
As we're talking about this volatility, in the article you point out that the daily average volume of gold traded is roughly 30 times that of Bitcoin. Is this due mostly in part to the fact that there's a much larger futures market in gold than there is in Bitcoin?
Yeah. Oh, yeah. But like I was mentioning earlier, the difference in what's happening now is people are starting to take delivery. And you saw, exchanges change their rules for settlement of gold as recently as like 4 or 5 months ago, when there was a bit of a run on the gold price. People need to understand that, 80% of what's traded in the gold market is not really gold. It's just an actual future. It doesn't really even have any support of an actual gold bar or an ounce of gold. And so, you got to be really careful what you're buying in the gold market. A lot of the ETFs actually don't represent any real value. They're not backed by physical gold, or they're backed by fractional physical gold. And, in my world, the way I would play it is I would either be buying gold equities or the actual physical commodity. So I hope that answers your question there.
Partially. So how do you see that, let's say, going forward for Bitcoin? You and I were speaking before we hit record here about kind of the future of Bitcoin and crypto in general. So how do you see that moving forward from a futures trading standpoint?
The big issue right now is that I don't really think Bitcoin is necessarily on the radar of the SEC. I mean, they're starting to look at it, but it was $1 trillion market cap, and now it's probably closer to a $600 or a $500 million market cap. And that's just not anything fearful from a U.S. Fed or a U.S. politician's perspective. But if Bitcoin does what I think it's going to do, and I am a big believer in the macro view, and that Bitcoin probably will start trading closer to 100,000, maybe even higher than that, then I think you got to watch out, because my gut tells me that exactly what has happened to the gold market is going to happen to the crypto market, where you're going to see derivative products that the Fed and bullion banks and whatnot can leverage and control the price action to suit their needs, or quite frankly, make it illegal, or quite frankly, come up with their own cryptocurrency to compete with it. So, investors really need to be wary of what could happen and could go wrong in the crypto market. But in the meantime, I think it's good times ahead.
So you're more of the opinion that the U.S. government would try to control the crypto market more through derivatives pricing than through, let's say, making it completely illegal?
That's too tough a question to answer. I don't know. I just know that there's a lot of optionality for U.S. regulators to make crypto very, very problematic. It won't occur until they view it as a competing or competitive product to the U.S. dollar or their ability to control markets. So for the meantime, things will be okay. But if the price of crypto gets too high and the market cap gets too high and it becomes an alternative to the U.S. dollar, just like gold, you will see them step in some way, shape, or form. Mm-hmm.
So do you take a barbell approach to really investing in these two different asset classes?
I'm a weird investor. I spent way too much time in university. I have an MBA, a master's, and I started my PhD. My view is that you can only have 3 or 4 positions, and you should have a lot in those 3 or 4 positions. It's very, very contrary to the diversified way of approaching investing. So, you call it a barbell, but in my mind, being long DeFi Technologies, the company, or DeFi as protocols, and being long gold, i.e. Trillium, is exactly the same trade. So it's not a barbell. It's I'm long a specific view on the market.
Mm-hmm. So how is it that the crypto space is working towards being more transparent? In the article, you also said that the space has the benefit of eliminating terrorist financing or the proceeds of crime. But this kind of seems counterintuitive to one looking at the crypto market, because one of the main appeals of it was that it was supposed to be more anonymous.
It's anonymous, but you can trace it, right? And in that respect, it's actually, from a governance perspective, a better form of currency. Like the US dollars are pretty much the easiest way for malfeasance to continue, whereas crypto has this huge benefit. And I think that just speaks to people who don't really understand the premise of Bitcoin and how clean and how trackable it is. The bigger issues have been hacking of the exchanges and whatnot, not necessarily terrorist financing through Bitcoin.
Mm-hmm. So you mentioned just back a little bit there that you have a price target of, let's say, 80,000 to 100,000 for Bitcoin. And also in the article, you have a price target of $35,000 to $5,000 for gold.
Yeah.
So it also states that this is in the short to medium term. So what is that time frame to you, and what has to happen from a macroeconomic standpoint for each of these asset classes to reach that level?
Yeah. Look, I've been wrong far longer than I want to be. And the reality is that the amount of leverage that the Fed has and the billion banks have in controlling the price of gold is substantial. But again, my projection has more to do with realistic projections on inflation and what, clearly is now becoming front and center for investors in general, right? Lumber prices have soared, copper prices have soared. Like everything that people seem to want to do, eat, use, whatever is, going to the moon. Copper is sort of, the economic indicator for all economic indicators. So when I say short to medium term, my view is, the next 3 to 5 years, you'll see 3,000 plus gold. Bitcoin's a little bit different. I mean, you've seen Ethereum rocket specifically because of DeFi. Bitcoin is different in as much as if you start seeing the institutional investors participate in the market, that's when you're going to see, 100,000 Bitcoin. And that could happen as early as now. And so, again, I don't view them as mutually exclusive. I view them as two excellent trading opportunities for people to participate in both if they so choose.
So when you're talking about these institutions that need to come into Bitcoin, would, Tesla really buying quite a bit and Michael Saylor's?
Those aren't the institutions. Those aren't the institutions I'm talking about. I'm talking about the Fidelities and the BlackRocks. Right now they're limited to buying ETFs, right? That is how they can participate in the crypto market. They need to change their offering memorandums and their shareholder agreements and whatnot to allow them to buy what is effectively a brand new commodity, that being Bitcoin. That's when you start seeing Bitcoin going to the moon. Right now, it's retail dominated, it's high net worth dominated. And that's why it's so volatile. You see, a few people selling 10,000, 20,000 Bitcoin and it knocks the price down substantially. If you have institutions that are on the bid ready to pick that up, you won't have the volatility that you're seeing now, and you'll clearly have a much higher price in Bitcoin.
So as we contrast that same idea, but think about it in terms of gold, what do you think needs to happen to have the real big institutions come back into the gold and even the junior space?
Well, part A is the gold price moving higher, and that's what's happening. And, you're going to see generalists starting to participate in this upswing in the gold price again. I think it's the recognition of real inflation, which I think is also happening. So my gut tells me that literally we're, a quarter or even imminently away from a massive piling in of generalist money into the gold space. Because currently it's literally the cheapest. I can't remember the stat I was looking at, but the junior gold market is the cheapest it's ever been versus all U.S. exchanges ever. To me, that's a smart move by a portfolio manager. Why buy something at all-time highs? Time to buy something at all-time lows, and that's the junior gold market.
Absolutely. It just, we've reviewed on this show so many times the low-risk nature of this, let's say, entry point, right?
Yep, and it's perfect timing. And these juniors, which are sitting at all-time lows that also have been underinvested in, you got to remember, supply demand also plays a factor in all of this. Copper, gold, and silver are the three least invested in from an infrastructure perspective over the last decade. These all have the potential to be 10 baggers from here. And it just blows me away that people continue to chase the fad rather than really the age-old saying, buy low, sell high. Don't buy high and sell low. It just doesn't make sense. That's how you lose money.
So many things we could apply that heuristic to right now, Russell, like especially the Canadian housing market.
Oh, it's crazy. It's crazy.
So, Russell, is there anything else you'd like to leave our audience with before we wrap up here?
No, just happy to chat with people. I'm reachable if people have questions, and I really appreciate the time to speak to your audience.
Excellent. What are some of the best ways to reach you? Of course, Trillium_Gold.
Email.
Okay.
Yeah, rstar@trilliumgold.com. 2 R's on the star.
Excellent. Russell, thanks so much for your time today.
You bet. Thanks again, Tom. Have a wonderful long weekend.
You too. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.